Good morning, I hope we're all well. Happy bank holiday. Although the sun is looking like it's shining, it's probably not going to for very long. There's a few things to go through today. This week's going to be a massive week. There are quite a few high impact datas to come. Tuesday, I believe, brings about non-farm payroll, Australian rate decisions. Then Thursday we've got the UK rate decisions. Then Friday we've got NFP and Canadian unemployment datas. So a couple of speeches out in the meantime as well. There's a speech from the US tonight. Then also New Zealand unemployment rates on Tuesday night, Wednesday morning. So it's going to be a massive week when it comes to data, which means that potentially we've got quite a massive week when it comes to movements also. So there are a few things to be very, very mindful and cautious of. Obviously, there's a couple of pairs that come out in the newsletter and the watch list that deserve some attention. There's also a few others that I just want to run through very quickly. So we've got Euro USD up at the moment. Obviously last week we saw the Fed rate decisions, which we then ended up having quite a sharp push to the upside, and led to us firing into 120-150, which is obviously also a level that we had highlighted last week for a potential push into. Thursday we didn't really do much. Then Friday, obviously, we saw a huge sell-off during the day, which led us into this week. Massive push, and we broke quite a few significant and key levels on the way through that as well. Obviously, rejecting away from 21.50. We also come back through and got through the previous resistance level and support region at 21.20, 121. And obviously we broke through 20.50, which was a key area for the pair also. Now, we've not been able to get below 120.20 yet. 120.20, if we just bang a level through very quickly, was quite a significant and key level for the pair for quite a long time. Let's just pull it through. You can see where we've acted as resistance and support, and this goes through quite a lot. It's a repeating subject where this level has acted as support and resistance on quite a few occasions. So it's only natural that we're seeing a little bit of support around this region, and we're obviously seeing a slowdown in price action. That's absolutely fine. We're seeing a reaction around that region. Now, a pullback into 20.50 does obviously make a lot of sense. Somewhere in the region of these previous lows would make a lot of sense for us to see a potential pullback into, or 55 even. That level would provide us with a potential entry point should we hit into this zone. You can see how many times we've had reactions and responses to this area, so that is what we need to be mindful of. And once we've kind of fire into this area and into that zone, we can look for potential sell-offs. There is also a very distinct possibility that we come up as high as 121. Now, if we break above 121.20, then that short bias has to then be abandoned, and we look for long positions back up. You can see that once we get through this 20 region, we'd have broken through those previous highs. Again, we've got those highs through there. That would signal to us that the highest probability move now would be a break above the 50 level, and then obviously up towards 22.50. So it's something that we would need to be extremely mindful of and watch for throughout the week. Breaks back above that 21.20 level would be massive, would likely lead us into, like I say, a push up to 22.50. For all the time though that we are trading below 121, like I said last week, the only logical place to look is to the downside. 121 was such a significant level in a significant area. It took massive fundamental data for us to break through that. Yes, we broke through. Yes, we saw closes above, but that has not been sustained. Therefore, looking for a lower high at some point early this week and being able to take advantage of that potential retracement, because obviously after such a move, we would definitely anticipate and definitely expect to see some form of a profit take or retracement, and a pullback up towards maybe not as high as 21, but certainly into that 50-60 region that we've got highlighted on the screen at the moment. So pullbacks into that zone and pullbacks into that region, we can definitely look to sell off from. As far as potential entries go now, I would have said 120, but I'm not going to now. I'm going to say 1980. I was caught in a position from 120 last week, and that ended up leading to a decent loss that took a long time, took a lot of hard work to recover. So getting involved around that area where we've seen such major significant pushes and movements away from make little to no sense. We'd be better off waiting for 119.90 to go, or as low as 80 if you wanted to, depending on where that entry is going to come from, to be honest. But letting those levels go would definitely keep probability on our side. Naturally, we have a little sticking point around 1950, somewhere around this region. But apart from that, we should be pretty clear cut to fire all the way back down to 119 or even 118.80, which is obviously the levels that we have spoken about before. While we're in the Euro pairs, we might as well have a look at Euro CAD and Euro Swiss. So Euro CAD, we'll start with, why not? Obviously, Canadian dollar, massive strength over the last 2 weeks. We saw the Canadian interest rate statement, not last week, the week before. That was extremely positive, led to a massive sell-off. And last week we broke back below 150.50. For those that were cool, we were calling for shorts below 150.50 about a month ago, which led to some pretty significant drops all the way down into 47.50. We then found our way back up, eventually meandering our way through, and then broke back through that 50.50 level last week. That led to a drop back down into that 47.50 region. But this morning, what we're looking for and what we've been looking for today is the potential for the retracements. Now, we closed below 48 yesterday, on Friday even. Closing below 48 was a big deal for the pair, but you can see where we've had this previous breakout with little to no retest since, even as high as 149.50. So what we can expect and anticipate is some form of a pullback and a profit take. Like you say, the pair has done a little over 300 pips since its last real significant pullback and push. So we can definitely expect to see some form of a pullback. That could come as high as 149. Could technically come as high as 149.50 before you would even consider taking potential long positions. So a push back up to 149.50 is possible and plausible. Somewhere within the lows of those regions would definitely give us the potential for short positions away from the rejection. It makes sense to stick with a short bias at the moment with the Canadian dollar being so strong. And also obviously the euro setting up against other currencies also. It's not necessarily that the euro is particularly weak, It has been riding a bit of a wave of momentum lately, but that really and truly looks as if it came from the dollar weakness and the strengths that came into a couple of other pairs also. So it's not that the euro looked particularly strong. I think it was just the best of a bad bunch at the time. So we can definitely look to see some form of a pullback into 149, 149.50, and then look to potentially short away from that. Looking for continuation entries, 47.50 definitely will present us with that opportunity if we can break back below. But we're more likely to see a potential breakout style position away from 48 than we are to see just a continuation entry. So now that we've seen this pull back up, I would definitely sit on my hands for a little bit, looking for 149 to come into play. If obviously 149 comes in, then we can look to sell away from that area and look to trade back to the downside, somewhere in and around 147.50. If obviously we don't see that, if we can get the breakout, then we can definitely trade that below. I would have said actually not to wait for the break of 47.50, but I think that might make a lot of sense actually. I think waiting for the lows to be taken out and getting an entry around 47.50 would make a lot of sense. So if an earlier entry presents itself around 148 or that break back below, then we'll look to take it. If it doesn't, then 147.50 would definitely present us with the next best opportunity, and that's where obviously we would probably look to take the pair and take a position then. Longs completely disregarded now until 150.50 is taken out. Maybe 49, yeah, until 150.50 is taken out, there's no point looking at potential longs on the pair. Euro Swiss, another one. We were waiting for the breakout of this range, this little boxed region that we had through here. We've been waiting for it for a couple of weeks. We finally got the breakout. We got a little breakout to the upside last week, but that didn't really come to much. No real confirmations or want to get involved in a position. But we have seen a breakout this week, or at the end of last week, so we can look to trade that breakout this week. Now, we've established some support around the level that we would have expected to see some support down at 109.75. That's obviously led to a little pushback up, and we're going to come back and retest this 110 level. When we retest this 110 level, obviously then if you're not already involved in it from the break, we can look to potentially take a position from that area. So if we do see a break to the upside and in and around that area and that zone, we can then look to short away from it, looking for that push back to the downside as and when that comes into play. There is nothing to say that will come in. There is nothing to say that is definitely going to happen, but it is certainly a pretty strong possibility. The fact that we've now broken through this region is a big thing. Now, the only thing that I will say is as we certainly come into the lower time frames, you can see this little area that we've got through here. Now that just so happens to also be the last area that we broke out from without a solid retest of the zone. So a pop back inside of 110 and as high as 110.15 isn't to be ruled out. There is every chance that we get back into that zone and then see a push from there. So we do need to just be a little bit mindful of potential pushes up as high as this area and then look to short away from that as the week progresses. The chances are we'll come and find that area by kind of lunchtime. Obviously we've got very thin liquidity, so the chances are that probably not going to look to enter too many positions today. Certainly as we have major fundamentals overnight tonight, so surrounding the Australian dollar, so we keep an eye, but there are a few Aussie pairs that definitely deserve a little bit of attention as well that we'll look through in just a moment. So Euro Swiss back into 110.10 or 110.15 or 110. Rejections away from anywhere around this area would give us the shorts back down. If we can break back below 109.75, probably wait till 70 goes just to get below these bodies. Once we get below that region, then obviously we would have that short position down. Don't want to long it until 110.50 goes, if 110.50 goes, but definitely shorts below 109.70 would see us back to that 108.80 region that we were looking to target for the last couple of weeks when it comes to these shorts. Pound dollar. Pound was another one that fell victim to the mass dollar strength that came into play last week. Big sell-off, and we can definitely expect to see some form of a retracement on the pair coming into this week. Now, whether we come back as high as 139 remains to be seen. We have a couple of regions that we could actually fire into. Naturally, we have the lows that we have through here, around 137, 38, 50, 138, not 50, 60 and 70, somewhere in that zone there. Or, naturally, as you say, you can come back up to the upside, looking for a push into somewhere around 39 or 39.20. A rejection away from any of these two regions would definitely give us an indication to short back down. If we can get an entry from back up here around 39, then we would also look to enter again on a break below 86.60, 38.60 even, and obviously then if we were to break back below 38.20, we would definitely look to continue that short back down towards 137, 136.80. So there's definitely the potential for that push to continue. We do, however, need to see some form of a pullback and a retracement on all of these dollar pairs. They all present the need and show that need to see those movements, to see those pushes. So we do need to be mindful of them. We do need to be very aware of them. There is no point trying to skirt over them or hide from them. They all need to be found. They all need to be seen. So we'll see what happens. We'll see if we can get that push to the upside. If we can see the rejections away, then we'll be able to take them. But as I say, on Thursday there is Bank of England monetary policy and their rate statements. So we need to be extremely mindful around that. Any positivity in that, anything like we saw last month, March, I believe. Anything that we see around that, then we're likely to see huge pushes, much like we did last time. So we will need to be extremely mindful when it comes to that. Also, just looking across the board, pound CAD. Similar to that Euro CAD that we were looking at just now, we have seen massive pushes all the way down. We've seen 600 odd pips being found since the CAD rate decision 2 weeks ago, a little under 2 weeks ago. See that push all the way back down. You can now see obviously where we have this previous little support region through this area. So we can see this little zone that we have and the need to fire back up as high as this. So pushes into potentially 172, but hopefully just around 71.50 are highly likely. They are definitely possibilities. We have got a resistance level around 70.50, so possible rejection away from 70.50 would definitely give us a potential entry back to the downside. However, the more likelihood is that we break above 70.50, we come up to 71.50 or 71.70 and then reject away from here. If we can reject away from here, then naturally, like before, we would look to enter again at 70.50. We'd also look to enter again at 69.70 when we were to break back below there. The retracements are going to happen. The liquidity is thin today, so we are going to see these pullbacks occur, I think. So it's a good thing because it sets us up well for the week. But be very mindful around these two little areas, these two zones, as they will potentially present us with some form of an entry. So it makes sense to be very mindful of those areas. I don't think Pound Oz and I don't think Pound New Zealand present us with anything that is really tradable below 79, so it's just going to retest 79.20. We have the potential. I wouldn't short that though. I would wait until 78.60 is taken out. That only gives us 50 pips down. That's just not worth taking, especially with fundamentals overnight. Pound New Zealand, that's probably going to pull back. That's not a pretty sight at all. So again, not interested in that as a position. Pound CAD and pound dollar are where we would need to be looking. I think when it comes to potential pound entries, they're the most probable opportunities we have. New Zealand Swiss, again, we've seen quite a lot of weakness coming to the New Zealand dollar over the last week, the last couple of days. But we're just very range bound in this pair at the moment. You can see that again we failed to break through that range. We closed below it on Friday, but we failed to close inside of that range at the moment. We're probably likely to now see pullbacks into 65.70. 65.80, somewhere in and around this region, where we could potentially then see a push back to the downside. Looking for shorts, if we can break back below this support region, then naturally we do have the potential to short it. We would definitely be looking for an initial target at 65, and then obviously to see that push down and see that continue into 64.20. It's doubtful that we're going to come any lower than that at the moment, but that pullback into this little zone in this region through here is naturally a possibility, so it's something that we need to be mindful of. So a push back up into 65.70, 65.80, that region, and a sell-off from there would be a good sign for us. Any breaks above, we would have the range trade back up, so an 80 to 20 position. Probably a 2-to-1. We're probably going to be able to get away realistically with 20 pip, 25 pip stop losses on this pair. So a push back up towards 66.20 would likely be the case if we were to break back above 65.80. But for all the time that we're trading below this region, I would expect to see some form of a retracement back up, a push back to the downside, and then a breakthrough eventually of 65.40. Presenting us with entries back to the downside and that 64.20 region that we just mentioned, although naturally seeing some form of price stalling around the whole number between 64.80 and 65. So we just need to be mindful of that. Something to watch for and keep an eye on. I don't need this chart open. I do need to go New Zealand dollar. Again, massive New Zealand weakness. Couple that with the strength that the US dollar saw last week, and that led to some pretty substantial movements. Looking for potential positions now. Obviously, we've seen this push up overnight and the rejection away with that engulfing formation. Not a lot we can do about it. We've missed that potential entry. So all we can look now is down towards this 71.50, 71.45 region that we have through here. Rejections away from that zone would definitely lead us into potential short positions. I just want to bring this across to take into account these previous lows that we're seeing. So definitely have the potential to short New Zealand dollar below 71.50. treat that as a breakout to avoid the chances of getting caught in a potential false break situation. But the fact that we've come within a couple of pips of this region, this zone, would definitely give the indication that we're likely to see a push down towards 70.80, 70.60, somewhere around that region. And then obviously a break through that would probably likely lead us down into 69.50. So we need to be mindful, we need to be cautious. If we break back above 71.80 or above 72, then the likelihood is that we come back to the 72.40 region, somewhere in and around these previous lows, to find some potential resistance. I highly doubt that the US dollar is going to weaken off that much unless it comes through until Friday and we're still trading around this zone in this area. Then I would probably look at the possibility or the probability even of that happening. But for all the time that we're not in and around that, I would be fairly comfortable and fairly confident with the fact that we're probably just going to see pushes to the downside at the moment. But we shall see. Something to be mindful of. One thing I want to look at quickly is Aussie dollar. Again, much like the New Zealand dollar, it weakened off quite a lot last week. We saw quite a lot of sharp sell-offs, and then we broke back below 77.50, which was massive for the pair. We've established some support. We established some support last week, tail end of last week, in and around the whole number zone. So if we can break back below 77, and C breaks back below 77, then we would definitely have the opportunity to short back down. We do have a region at the 80 level, 76.80, to be mindful of, a little area of resistance. But in truth, that shouldn't hold any weight, and that should see us then break through this consolidation that we've been trapped in. You can see where we've used this area of support so many times. It runs all the way through. Getting below 77 as a whole number would be massive for the pair and would likely lead us into pretty sharp pushes into 76 or potentially down to 75.50. So something to be very mindful of when we're looking at that pair. I know Aussie Swiss, I don't have it marked up, but again, Aussie Swiss, we do have the potential to short in and around this area too. We could definitely take positions below 70.20, so definitely below previous lows, looking simply for a position down into 69.20. Real easy, real clear cut, nothing too strenuous there, but it does definitely present us with a potential opportunity. So something to be mindful of. I'm actually going to alert that region now, just so that I have it set up ready. But that's a clear cut short position in and below that area if it does present itself. And the last one I want to look at is dollar yen. You can see where this has clearly been used for education purposes, but we are trading around a massive level. The fact that I don't need to mark this chart up is beautiful, but we can see the amount of resistance and support that we've seen around this region before. It being a massive area, definitely a very old chart just from the way that it is marked up. But like I say, if we can break back above this region, that is big for the pair. We can look to trade this all the way back up to the highs at 110. So a break at 111 even. So a break back above 110 would definitely give us that opportunity to take that 100 pip position. I would definitely wait for 110 to be taken out, but above 110 definitely have a position up to 111. If we don't see that come into play, then I would potentially look to short below 109, and then ride that down to 107.50 So there is a potential surrounding dollar yen at the moment, but above 110 makes the most sense. I just want to have a look at gold, see if where we're trading around. We can see the rejections that we're having this morning away from the same level at 1780. I'm still pretty content with shorts below 65 at the moment. I would just wait for 1765 to go. There's definitely the potential that you could pull back into this zone where we've seen previous support, previous resistance on the lower time frames, and see that push back to the upside. So trying to bank the 50 pips that it would take to get we would potentially win on the way back down seems completely illogical, when if we do get below 65, we've got the potential to get to 50 easily, so that's 150 pips just there, and then obviously the potential to come below that into 40 gives us a potential 250 pip movement. So just wait it out, be patient. If it's going to be, it's going to be. We look to profit as and when that does occur. I hope everyone has a decent day, whatever you're up to. Enjoy the bank holiday. And like I say, we'll catch up a little bit later.